Welcome back. We are on countdown mode. We are a minute and a half away from the July jobs report. Economists are expecting 110,000 jobs added to the economy in the month of July, with the unemployment rate ticking higher to 4.2%. We are waiting on the numbers. Let me bring in ER Shares CEO Joel Schulman to discuss the healthcare. The marriage of healthcare and technology is huge, and that is creating lots of jobs. So you mentioned things like nurse practitioners and nurses and physician assistant jobs, which pay big numbers. I also want to mention some of the trades jobs, because this is part of President Trump's agenda as he is tapping into the energy capacity of this country with oil and gas and nuclear and all the rest. You're seeing job needs for electricians, plumbers, engineers, and these are also high-paying jobs. We don't have enough electricians. So there are opportunities there, not to mention all the tech names. Joel Schulman, that's what's been driving these stocks.
Right.
The market, the NASDAQ, up better than 35% just from the lows on April 8th.
Yeah, well, a couple of things. So AI is a big factor here. So a couple of things related to that. One, it's not the number of jobs so much as it's the type of jobs. And people have been talking about the gap between the richest and the poorest, and that gap's going to widen. A couple of things. One, entry-level jobs are being decimated by AI. So the entry-level jobs, particularly for college grads, the inexperienced people are going to suffer in this market. On the other hand, those with experience are benefiting with AI. And so those at the high end of the curve, the baby boomers with the experience benefit with AI because they're able to get rid of all these sort of mundane tasks they no longer want to do. Now, as we translate that to corporate America, what's happening is the richest companies are able to employ AI effectively. Probably the biggest impact we've seen since the 1980s in terms of what's happening with technology and how it's helping companies. So in the 1980s, we had spreadsheets that were able to wipe out entire rooms of analysts. Now we're seeing AI do the same sort of thing. And so what we're seeing in the marketplace, particularly for tech companies, we saw Meta yesterday. This morning, you're going to hear about Reddit coming out. It's up 26% in the last 3 days. It's up 14% pre-market. These are companies that are benefiting from AI, and they're not hiring as many. They're not laying off necessarily. There are a number of companies laying off, but they're hiring fewer people, particularly the inexperienced people. This is benefiting technology companies. It's widening the gap between the have and have-nots. And so we're going to hear more about that. And I think this number is going to force the Fed to cut more sooner. So we're going to see, we don't have a meeting in August, but September, October, not November, but December, we may see 3 rate cuts. I think this number is going to push them to action.
All right, so you think we're going to see 3 cuts just in the next couple of months before year end? Look, everything we were focused on is materializing at what we expected. Government jobs are down. Government down 10,000. State and local education jobs down 11,600. Private education services up 5,800. Healthcare up 55,400. So again, President Trump's goal of having the private sector, private enterprise, lead this economy is materializing. That's what he said in my interview back in March earlier this year. He wants private enterprise to rule the day, not big government. Well, here's what I'm focused on with regard to the tariffs. And Cowen and Company this morning writes this: the transshipment. This is the biggest change, the analyst says, and a new policy from Liberation Day 3.0. The creation of a new universal 40% stacking transshipment tariff that Customs and Border Patrol will have to deal with. You also have expectations out there that this August 12th deadline for China is likely to be extended, though we're watching the Russia secondary tariff deadline of August 8th as well. So we've got still some moving parts, Joel Schulman, and perhaps that's one reason investors are taking a breather here from this huge rally that we've seen in the last 2 months.
Well, we've had a huge rally. We've been bullish all year. We actually are more bullish now, particularly with this news, because I think we're going to see year-end come in really strong. We're seeing, to the point about earnings, we're seeing greater margin expansion than we have in many, many years. And again, it's not shared by everyone, but many companies, and I mentioned a few before, are expanding margins faster than ever on top of growing revenue. So this is going to be a stock picker's market. And we've had these things before, but this is really it. You're going to see some companies really getting beat up, and some companies are going to take advantage of technology in this marketplace. And I think the gap between the ECB and the Fed is too wide. It's 2.5%. The inflation is about the same. And the other thing we haven't factored in yet is CPI. And people have been talking about real estate and mortgages and so forth. Well, that's had a negative effect for much of this country. Many of your listeners are in parts of the country where real estate's dropping. In Florida and parts of the Midwest, certainly the West Coast, we're seeing real estate drop. The CPI is a lagging variable by maybe 9 months to a year. We're going to start seeing real estate come down from 0.3, 0.4% per month, month-over-month increases to 0.3, 0.2, 0.1. Being a one-third weight in the CPI, that has a significant effect on what our inflation is going to be. And that's going to be an offsetting factor. It's going to be a mitigating factor to the tariff concerns. And so, again, we don't have a Fed meeting in August, but you're going to start hearing more rumblings that we need rate cuts to really kick in September. You're probably going to see the Fed make some sort of side comments in the next a week or so, maybe even as soon as today, tomorrow, that maybe they're going to be a little bit more considerate in terms of cutting the rates as they should for the last 3 meetings.
Well, look, we're all talking about a weakening economy, a slowing economy with this jobs number. I think we cannot underestimate the growth story of technology, the marriage of technology and healthcare. And we will leave it there. Great conversation, everybody. We so appreciate it. Have a fantastic weekend. Stephanie Pomboy, Steve Moore, Joni Biley, Joel Schulman, and John Lont.